Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 8th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your support is what keeps this channel going. I have quite an ambitious agenda today. I have some interesting intermarket relationships to cover, so let's try to get to it. We'll look at S&P 500 support resistance interplay. NASDAQ actually went on a sell signal, a short signal, so if you're an advanced trader you can do that. Russell 2000 might retest recent lows. Treasuries again hit a new lows, and mortgage rates just hit a 3-year high. Yield curve could invert. I'll show you the yield curve again. Bear market and recession could follow. This I'll show you historical examples of how that happened in 2000 and in 2008. During those periods, you could say that, oh, but I'm going to buy defensive utilities stocks, and can investors do that? Can they hide in the utilities? We'll find out. And junk debt, I think, is going to retest March lows. This is really bad for stocks because of the correlations. So we'll look also at dollar, which has possibly topped, and this should help our precious metals positions. And Bitcoin could collapse further, could continue significantly further down. If you're a subscriber, then stay tuned for separate videos. I'm going to cover all of these various stocks. You can see we have quite a bit of various gold related, and stay tuned for that. Right, let's get right to it. So first of all, on this chart we can see this green, blue, red, and yellow lines. I really zoomed in quite hard. This is daily chart, and this is only like 2 weeks or less than like 10 days worth of activity, and I wanted to show the support resistance interplay. So this blue line is currently acting as support, was support up until right there on 6th of April, when that support was broken. And then again on 7th of April and on 8th of April we tested this overhead support. So price came up to that support resistance line and was rejected. So twice already this support resistance was rejected by the price. So this is currently at 4516.25. So this is a pretty exact number. Let's see if it holds. If it does hold, then most likely we're going to continue lower. And I will show you that there is many indications that could be the case indeed. Overall, technically speaking, this is S&P 500, so technically speaking we did close above this blue support resistance line, and to me this means it's a bullish market. So we're still technically in a bull market. You can find out more about this lines by going to my website. You can find description in the website in the comments below. So as of right this instant, I still think that S&P 500 is in an uptrend, and that's kind of where I am right now. But there are many other indications that are pointing to a potential reversal to the downside, especially weakness in NASDAQ. So here's NASDAQ. Again, this is daily chart. So daily means 1 day is each candlestick is 1 day's worth of activity. So this is NASDAQ, and on NASDAQ this was the entry into a bear market, and this happened on March 8th. And since the NASDAQ entered bear market, we were waiting for a bounce, and then we were waiting to sell it short. So actually today as we speak, well, it's already after the market closed, but on today was the signal on 8th of April. I am reluctant to take it at this time because S&P 500 I still think is in a bull market. So I give the benefit of a doubt to the bulls because stocks tend to have a bullish bias. In other words, they tend to go up. However, this for aggressive traders, this is a signal. Sell it short right now, basically. So let's see what happens Monday. But this is already a signal to me. So quite possibly we'll retest lows from the March. So that's nice 10% gain. Maybe we'll break those lows if this trade works out. But S&P 500 is still in a bull trend. So once again, I'm reluctant to take this trade. Having said that, here's Russell 2000, and this thing entered bear market even earlier. This was in January of this year. And so actually we had two opportunities already, one on 10th of February and another one right there on the 30th of March. Both would have been successful. These were bearish setups to sell them short. And you can see how clear this was using my indicator lines. You don't have to guess, you don't have to think. You just look at the lines and say, okay, is this the time to sell it short? So you can actually have another opportunity right there, but not an ideal entry. The best entry would have been right there on the 30th of March. And you would have been correct. So looks like there's a good chance we're going to retest the lows from the February, 24th of February right there. So it's entirely possible. Treasury bonds. So here are the Treasury bonds TLT. If you sold them short, if you shorted them and you kept the position open, the most important thing is to kind of stick with it and stay with the position. So if you were able to sell it short on the 3rd of February, you would have been richly rewarded with a over 11% gain. And usually people do like puts, they would buy puts. So if you buy puts, usually this is like 30% gain. You multiply by 3. That's like a good average number. Another opportunity right there on the 1st of March. I did not send an alert, unfortunately, but you did have an opportunity there if you have my indicators. So Treasuries, moving to new lows implies that mortgage rates are moving to new highs. This is let's look at weekly chart, just easier to look at. Excuse me. So this is a 3-year high mortgage. You can see last time we were here was in December 2018. So high mortgage prices, high mortgage rates will eventually weigh on real estate. When this is going to happen, nobody really knows. But real estate is clearly unaffordable to vast majority of people. So, high mortgage rates is another possibility that real estate will finally come down. But I'm not really playing mortgage rates right now. I'm not really playing real estate right now. So this is just to think, for you guys to think. Historically, mortgage rates are not that high. If we go back to the 90s, you can see the mortgage rates were much higher back then, and real estate was much more affordable, I suppose. So perhaps we have seen the bottom of mortgage rates, which happened right there in, during the pandemic, basically, December, January of 21, December 22, and maybe we'll see now the opposite. We'll finally see some sort of affordability for mortgage, for real estate. But before we go any further with extrapolation, let's look at dynamic yield curve. So why do I keep looking at the dynamic yield curve is that because, for example, in year 2000, the yield curve inverted. So where I'm hovering right now, it says inverted. That means the short-term interest rates were higher than the long-term interest rates. It doesn't make any sense, and that's why we call it inverted. The same thing happened sometime in 2007. You can see also inverted yield curve. So as of right now, we're not yet inverted, we're flat. Where I'm hovering, it says flat. And also interest rates are rising, because we're seeing drop in bonds. So if we're going to see further rise in short-term interest rates, we will eventually invert the yield curve. And usually, well, in this case, in two of these examples, in 2007 and in the year 2000, it was followed by a bear market in stocks. So what I wanted to show is there is a kind of idea that investors will say, okay, what I'll do is I'll buy defensive stocks like XLU, utilities. And right now you would be correct. So for example, these are actual alerts for my subscribers, and we would have been long, whoever bought them, one of my subscribers, for example, if you bought them, that's 14% gain, because they are definitely a defensive sector versus a offensive sector such as XLY, consumer discretionary. And these are things like restaurants. People, when they have no money, will not buy food at the restaurants. So you can see that actually this one is in a bear market. Right there on the 7th of March, I sent avoid to my subscribers. And again, right this instant, I would be shorting it if the S&P 500 was not technically in a bull market yet. So these two stock sectors, the utilities and the discretionary, are kind of two extremes. One is extremely offensive and extremely exuberant. People have money, they will spend money, and usually this happens when the discretionary are going up during the strong bull markets, versus utilities, which is very, not really interesting stocks, but for some reason right now they're leading to the upside. They're at all-time record highs. So let's look at some historical examples very briefly again. And here's year 2000 bear market that started sometime in 2000 right there. So on this chart, in black is the S&P 500, in green is the utilities, and in red is the XLY, consumer discretionary. But the most important thing is I wanted to show you is that you cannot hide in utilities. You can see that utilities, together with S&P 500, together with the consumer discretionary, all got sold from year 2000 into year 2002, where it bottomed finally in October. And then all of them started to rise again. This is called correlation. They tend to move together in lockstep. Very much the same thing happened in the bear market of 2007 to 2009. You can see also in black here is S&P 500, in green the XLU utilities, and in red is the consumer discretionary. And correlations here were even stronger. Everything just collapsed together, and then everything started to rise again. Once the bull market started, the XLY, consumer discretionary, were outperforming, and XLU, the utilities, were underperforming. This is normal, all right? On the way down, it's the other way around. So consumer discretionary outperformed to the downside, and utilities sort of hold their value, but also eventually they will get sold. So again, do not think that you will be hiding in utilities during the bear markets. You will not. Everything during true bear market, everything will get sold, and you can see that this happened in year 2000, in year 2007, 2009 as well. So once again, do not think that you will hide in utilities. Moving on to the junk debt. So this one really worries me. So junk debt and S&P 500 correlate very strongly. So this is junk debt, JNK, high yield bonds. you can see them. This is a weekly chart, and this is correlation coefficient to the S&P 500. It's basically very, very strongly positively correlated. So when junk debt is approaching new lows, it is making me very worried, because I think that it is going to be leading the S&P 500 lower, leading the stocks lower, and it's already doing that for small caps and for NASDAQ. S&P 500 for some reason is still holding on. It hasn't yet collapsed. So that's why I'm kind of cautious right now. I'm just not really sure what's happening, and I want to be just very cautious at this point. So junk debt is most likely going to retest this low. If it might hold or it might not hold. I thought that this level, the yellow line right there, on 28th of March, I thought it held, but clearly it didn't. Right there on the 6th of April, it gapped through that line. So now we're on the way to retest of March lows. Again, this is worrying because of the correlation to the S&P 500, and I'm worried that we're going to see the junk debt, the NASDAQ, the Russell 2000 are all kind of moving towards new lows. In fact, I'm going to show you one more. IYT, transportation sector, just completely unraveled. Look at this move to the downside. And transportation sector is important, especially if you're a Dow Jones, Dow Theory subscriber, where Dow Theory says that if Dow Jones is moving in one direction, then transportation average should be moving in the same direction. If Dow Jones make a high, then transportation sector should also make a new high. But now we're seeing the opposite. Now we're seeing Dow Jones transportation sector move to the downside. Actually, it's leading to the downside. It's one of the weakest sectors. So this is all very unnerving. Right, moving on to the commodities, and the only thing I'm going to cover today is the dollar and the gold. So DXY dollar index, sort of unstoppable. We started thinking that it is bullish back here in July of 2021. Again, I'm not really thinking, I'm just looking at the lines. And I'm correct. Look at the size of this move. So when dollar is in a bull market, gold is in a bear market, usually, but not always. And lately, you can see gold actually made a new, it moved towards new highs. And I think that finally, dollar is topping out. This could be a topping candle today, on 8th of January, on 8th of April. So if it is indeed topping out, and today's candle for gold is actually quite nice, quite bullish. So I'm thinking we might see a move towards the highs for gold, and by extension gold miners, and that's why we trade a lot of gold miners in the speculator blog, so sign up there. So gold seems to want to go higher from here, and if it breaks out, I'm gonna look at the weekly chart. We can see a significant move higher if it breaks out. So I already showed this enormous pattern. Could be like a cup kind of thing. The depth of this cup is 23%. If we break above this high, then we can easily see it, 20% higher. We're looking at 2400 for gold easily. So if it breaks out here, so let's see if we bottomed here around the blue line at 1923 was the two alerts were recently sent. Let's see if it bottoms here, and we'll see what happens later. Here's Bitcoin sign, and then Bitcoin, I am taking some flack for thinking that it's in a bear market, but it's in a bear market. So you can see 1, 2, 3 opportunities to sell it short. Actually, this one is already successful, because all you need to do is get like that much, and this is average true range. So I use average true range, and average true range for Bitcoin is like 1800. So it already moved around $4,000 from where we shorted. We shorted it around 46,400. So it probably, let me see how much it moved from that side, from that. Yeah, that's exactly $4,000. So the target has been reached, and that means that at this point we take our stop. The stop was at the blue support resistance line right there. We take our stop, we move it to entry. So now at this point we can't lose. You see, that's the basic the basic way I trade. So Bitcoin most likely is moving lower, especially if these lows are taken out from January. It could easily continue. Oh my God, I don't know, a lot lower, to like 1600, maybe even lower. All right, that's it for this week's recap. So head over to MasterChartsTrading.com, click on products, sign up for one of the products. So I have kind of reformed this a little bit. So I have the trading indicators, the indicators that you see on this chart. So green, blue, red, and yellow line. These are basically support resistance lines, and you can it will help you trade. It simplifies trading tremendously. The newsletters. So newsletters are, we cover various stocks. So for example, today's newsletter for the subscribers will cover all of these various stocks. And both, if you want to sign up for both trading indicators and newsletters, right now it's on sale, $60. You can't really miss. If you want to talk to me on monthly basis, then I added one more option. So you get 60-minute one-on-one Zoom meeting, and I can basically screen share with you, and then we can discuss trading, and that's $259 per month. I think it's a reasonable deal. All right, that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching, and have another great trading week. Bye-bye.